Over 10%. That's how much Tesla stock surged after their Q3 earnings release. And if you think that's impressive, wait until you hear about the hidden numbers that most analysts completely missed. Felix here, and today we're going to unpack 3 game-changing developments from Tesla's earnings report that are going to reshape not just the EV landscape, but the energy sector and other sectors as well. We'll examine how they achieved a mind-boggling margin beat and the secret behind their record-breaking cash flow, as well as a surprising announcement about the sub 30K vehicle that nobody saw. We're going to look at how much the stock can go up on this news and talking about spotting market movements. Many of you have been asking, how do you spot those big breakouts, those big opportunities before they happen? Because it's really frustrating to be the FOMO buyer and to be late. And you know what? There is actually a rulebook to it. And there are 4 simple steps that you have to look at to spot those. And if you want to learn that, you're in luck. I've recorded a 30-minute masterclass for you. That's a combination of everything I learned as a former banker and then trading the last 10 years plus. And it's the same strategies that Wall Street's been using for almost 50 years, somewhat adopted to the new world order, if you will. And you can watch this completely for free. Part of my mission to make 1 million people financially free. All you got to do is head over to felixfriends.org/get-free and learn a proven method for spotting winning stocks and therefore potentially beating the freaking market, which is what we're all about. We're wondering if we beat the market, well, we're up 94% so far this year. So I think we're doing quite well. Now, our pre-earnings predictions held up very, very nicely. In fact, we were spot on the big mover that nobody really saw coming. If you watched my last video, I emphasized that focusing on the energy division as well as AI integration is the key to look out for, and that turned out to be just right. But Tesla didn't just beat earnings expectations. They absolutely demolished them. We're looking at an earnings per share of 72 cents. Wall Street was expecting 60 cents. That's a 20% rather beat, which is, well, knocking it out of the park, really. But the real reason we're seeing this rally right now is the gross margins that are so important to Wall Street, nobody else really, but to Wall Street, came in at almost 20%. And Wall Street was expecting sub 17%. So very, very impressive. And it means that, well, they're getting more efficient. And this has nothing to do with government handouts and subsidies and all that stuff, by the way. This is just pure efficiency on Tesla's count. And free cash flow came in at 2.7 billion. We were expecting only 1.6. That's a 70% beat. Incredible performance from a company that everyone said, oh, if they keep cutting prices, then they won't be able to make any money and the stock won't be worth anything. Well, you know, eat your hat, bloody analysts. And while car revenues are still 87% of the total revenue, so yeah, Wall Street still looks at it as a car company. Sorry, energy division is showing some extraordinary growth, which validates our long-term thesis about Tesla's move from an automotive play to an energy play to an AI play. Now, Elon's known for making some pretty bold claims, right? But if you listen to his latest statements and the developments on FSD, those are genuinely extraordinary. Let me break down Elon's key statement from the earnings call. He says version 13 of FSD is showing 5 to 6-fold improvements in miles between interventions. So your naps at the wheel are going to get longer. It's illegal to nap at the wheel, by the way. It still is. It's coming. And he's expecting FSD to surpass human driving safety by the 2nd or the 3rd quarter of next year. That soon. Crazy. Tesla's director of autopilot software gave us a bit more context. He said they've already achieved 100x improvement with the 12.5 version. And version 13 is pushing towards 1,000x improvement. And the safety metrics are insanely impressive. And that's what you need to convince regulators, right? 1 crash per 7 million miles. What does that mean? Well, the industry average is 1 crash per 700,000 miles. So it's 10 times safer than the industry average. What about on the production side? Well, they hit the 7 millionth vehicle milestone. The new 30K model is confirmed for the first half of next year. The Cybercap efficiency improvements are promising a half order of magnitude better than what we've seen. And the energy division is absolutely crushing it. Megapack factory reaching 40 gigawatt hours annual run rate. The Shanghai facility is adding 20 gigawatt hours in the first quarter of next year. Margins are exceeding 30% on that. And it addresses 3 real needs out there. 3, 5, right? Bankers with their counting. We're looking at the whole grid modernization, renewable energy integration. We're looking at global data center expansion. Do you read? Google is going to fund 7 nuclear power plants to run their data centers. There's going to be a massive demand for AI compute power. And then we look at the guidance. The earnings are always about guidance. What's next? The market's forward looking. Well, Elon's predicting vehicle growth at 20 to 30% for the coming year, which is extraordinary to be accelerating growth in this economic environment. The Cybercap targets are really, really bold. Elon said, and that should be substantial, as in the production run-up. We are aiming for at least 2 million units a year of Cybercap. That'll be in more than one factory, but I think it's at least 2 million units a year, maybe 4 million ultimately. So yes, these are just my best guesses, but if you ask me my best guesses, those are my best guesses. Insane stuff. Elon's vision for energy storage is also out of anything people can really imagine. Here is his exact words from the earnings call. He says, it won't be long before we're shipping 100 gigawatt hours a year in stationary storage at Tesla. And that'll ultimately grow to multiple terawatt hours per year. Regarding FSD, Elon made the following statement, which also knocked my socks off. He says, our internal estimate is Q2 of next year, we're going to be safer than a human. And then we're going to continue with rapid improvements thereafter. A vast majority of humanity has no idea that Tesla could drive themselves. It looks like a normal car, so you don't expect a normal car to be able to be intelligent enough to drive itself. And remember the whole AI integration thing, the mega factories, production, all that stuff we talked about before? Well, they've confirmed the central role of AI here for Tesla's future. But what about all the competition? Everyone always says, oh, well, there is Waymo and there is this and that company and Uber and they're all going to have Elon's lunch on self-driving. Well, let me give you Elon's exact words. We're currently making in the order of 35,000 autonomous vehicles a week. Compare that to, say, Waymo's entire fleet. They have less than 1,000 cars. We're making 35,000 a week. So yeah, Waymo is like a fruit fly on Elon's shoulder. And the market's reaction to this earnings call is actually positive for once. We've got a 10% plus jump, and that isn't just retail enthusiasm. That means there is a fundamental shift in institutional sentiment. And I'm going to show you what that looks like on the stock chart, right? There's 2 charts I want you to look at. One here, this is in TradeVision, software we built to make institutional grade data available to everybody out there. And you can see we've been down the last almost 2 years, about 44%, right? Buy and hold is really, really, really sacked on this one. If we traded just the breakouts here that we highlight on the chart, you know, in real time, you get emails as well, you'd be up 81%. That's only a 125% beat, so probably not worth it, $19 a month, right? There is a free trial as well. You can check it out. But the really interesting thing is we give you, if you click on in the top right here on the advanced chart for people who can handle a bit more of a complex chart, we've got a resistance line here. And that resistance line isn't something we make up. It's not even based on the chart. It's based on real market maker positionings. So we look at all of the options positions out there. Maybe you don't care about options, but 85% of the institutional market out there is options because that's how these guys make more money. So we know that it's going to be hard to break through 300. But that resistance last week, if I remember correctly, was sitting at like 250, 260. So the market is already adjusted. It's already jumped up. And it means we have a really nice runway up here of about $60 or so without any real hindrance, which I absolutely freaking love. And, you know, I mentioned breakouts earlier on, right? Wouldn't you like to have bought Tesla in June at, say, sub 200? Well, you could have done if you'd known what to look for. Or if you went back a little bit in time here, you could have bought it at, again, sub 200, and then you could have exited at 260. So if you want to spot those breakouts, and they really are super simple to spot. Once you know what to look for, once you watch the masterclass I recorded for you, just go to felixprehn.org/get-free. You'll know what to look for. If you, yeah, and it's just life's going to be very, very different. And you can go through all the charts in the world and you'll spot them all the time, and you'll actually understand that that's really what drives the market. So go and learn that, please. And I know less than 1% of the people who watch this video are going to learn that. So if you want to know why there is a wealth gap, it's because the 99% don't take any action. They just find an excuse why they don't. But you, my friend, I'm sure are not part of that, right? You want to be part of the 1%, don't you? Don't you? Or are you too scared to be part of the 1%? A lot of people are scared of the 1%. I used to be scared to be part of the 1%. But anyway, this is not a motivational video. Let's go back into Tesla data here. So if we look at the strong margins and the cash flow we discussed earlier, those are the numbers that large funds look for when they make long-term positions. And Tesla is this time giving us a very clear growth roadmap. They're giving us specific, measurable targets rather than the sort of usual vague, sometime in the future type thing. And that's the kind of transparency and specificity, is that the word, specificity, that Wall Street loves. So the autonomous driving timeline is a massive catalyst, I think. Tesla telling us that they're going to surpass human safety by the second quarter of 2025. Well, that came out. Options activity went through the moon, and we can see that already here in the resistance line on the chart. Markets love real targets, especially in emerging tech. But most analysts have still missed the following: that the energy division's performance isn't just about current numbers, it's about future market positioning. The data centers and the grid monetization are driving demand beyond what most people understand. The energy division is going to become a huge growth engine for Tesla. So let's map out Tesla's growth trajectory here and understand how all the pieces fall together. So for 2025, we're looking at the launch of the affordable model. Yeah, that's still coming. That's a $30K price point, including offers and subsidies and so on. But that's just the beginning. On October 23rd, Palo Alto, the heart of Silicon Valley, started talks with Tesla to transform their city streets into a testing ground for the cybercab. It's not just another pilot program, it's Silicon Valley's innovation hub, essentially becoming a real-world lab for autonomous vehicle testing. And that Palo Alto development perfectly aligns with Tesla's FSD safety milestone timeline. So when your testing ground is literally the tech's backyard, that speaks quite a lot about the confidence levels out there. And on the other hand, we got the energy division giving us 4 key reasons to be super bullish. Because, well, it reduces dependency on car revenue. Margins are higher than 30%, which is higher than the car division. And competition is significantly less intense. And it aligns perfectly with the AI and the computing trends out there. And if we look into 2026 and beyond, we get cybercab production scaling to 2 to 4 million units annually. That's not going to happen in 2026, by the way. That's more like a 27, 28 kind of a target. But they are going into full production, he says, in 2026. So whatever that number means, I would imagine there would need to be at least 5 to 6 figures of cybercabs rolling out. The energy storage is going to reach terawatt-hour scale a year, and we have the global expansion of autonomous services. So what are the implications for you and me, my friend? Well, with that roadmap, and it getting clearer and clearer with every announcement, and looking at the stock chart here, what do we see? We're right here at this blue line as I'm recording that. Massive gap up. So the whole drop from the robo-taxi event undone because Wall Street suddenly realized, whoops, that's actually a real thing. So what are we looking out for? Well, we still have these 2 highs here, which would take us to about 258. There'll be a little bit of a wobble there. You break through that, and then, $300 is your uncle, so to speak. And that also happens to be the July 2023 hype, $300. So my immediate price target is $300. Long term, do I think they can 5x? Yeah, easy. I think $1,000 is easy. That is just my opinion. Obviously, no crystal balls over here. But I think the robo-taxis could do it in itself. The energy division could add a couple of $100. the robots, I think, could add $1,000. That's just my view. So I think there is a lot of reasons here to be insanely bullish. And did you catch that little mention about flying cars? That's a whole other thing. We're going to make another video on that because a lot happened literally just about the whole regulation in the eVTOL flying car space. And again, this isn't something completely new. Look to Xpeng, for example. They've already done that, essentially flying cars. It's sort of a drone with wheels, if you will. And that's coming too. And I'm sure Tesla's going to be at the forefront of that. They're already invested in it and so on. So there is so much more excitement that's going to come up. And if you think that Elon isn't going to innovate anything between now and, say, 2028, well, you know, I think he's going to come up with some other stuff as well. So are there risks? Yeah, sure. Regulators could, like, you know, try and slow this down. Although with Waymo on the roads, I think that'll be quite hard because you can always go to court and get the same license that Waymo's got and so on. And once you can give evidence and show that you're actually safer than humans, and once they hit that mark in 2025, they're going to get so much more safer than humans within months. The acceleration is going to get up and up and up with all the AI compute power they're putting out there. So this Tesla Q3 earnings call, best one I've seen in many, many years, continues to have me feel very, very bullish on the stock right now. So what are we doing? We're holding on to our leaps. We might add some more to it. We're very much enjoying the ride. I think it's going to make us all very, very wealthy. That's really my summary. Of course, diversification, I do that. I haven't got all my money in one stock. I think that'll be a silly thing to do. But if you want to, like, really learn something here, I mean, go play with tradevision.io, but to really, you got to have that knowledge that you can spot with confidence those breakouts. You got to understand when to exit and all of that. So head over to felixprehn.com/get-free. Watch that masterclass. I recorded it for you because I know we do a live event. We did one last week. Not everybody can attend. Sometimes it's in the middle of the night for you and so on. So here you can literally just hit play. You can watch it. About 30 minutes, and you'll really, like, learn those rules. I'll really show them to you. We run through some real examples, and you walk away with that skill, and you'll never look at a stock chart quite the same. And it's tremendous. Like, when that penny first dropped for me, I was just like, I can't believe it. And I spent weeks looking at charts, basically. I never left my screen. And I still do. I look at charts all the freaking time. We are launching a stock investing, stock trading program as well on Monday, literally, which I'm super excited about. Super simple, just how to manage those positions and aim to beat the market massively. And I'll be sharing my charts every week with you inside that community. We're going to have investment bankers coaching you, one-on-ones and all that stuff. It's going to be tremendous. You want a little bit more about that. I also allude to that in the masterclass, so do check that out. But you'll walk away with some real knowledge from the masterclass, and that's always my intention. Give you massive, massive value. So check it out. Thanks for watching. All the best. Imagine waking up tomorrow to find Tesla's stock price has skyrocketed 20% overnight. Or worse, plummeted by the same amount.